Hey everybody, Jonathan Broadbent here, your host of UnWoke.Academy. Another quick, I got a runaway microphone here. I've got a deviant arm. I've got another quick hit on a mutual fund. So this one just came to my attention. This was actually sent to me in the mail with some curiosity. This is the Hartford Capital Appreciation Fund. So a few things, a few housekeeping notes here. I run UnWoke.Academy. If you're not already a follower, everything that I do is free and publicly available. I am ex Wall Street and have worked in institutional finance for many, many decades now. And I started Unwoke investing because I saw some stuff happening to and on Wall Street in the world of finance that doesn't sit well with me. It's everything that has been tried and true. All the norms of finance were thrown on their ear about 5 years ago, and we stopped paying attention to the stuff that we all know and can quantify and replaced it with things that are sort of sound good on paper. They kind of feel good, like environmental, social, and governance. Ooh, who wouldn't want that? And diversity, equity, and inclusion. Except in my world, when you're evaluating something financially, you can't have something that doesn't actually have meaning. You have to define it. So I spent a couple of years asking people, most of the big money managers, because of where I have been and the people I've met and worked with and sit in the world of finance. I have access to some pretty high profile, big names in the world of finance. Many of them are friends of mine. And I called up and said, basically, for 2.5, 3, 4 years, I don't know, I lost track of time. I was having so much fun. Was routinely asking the question, what's the scoop with, bear with me a second here. I've got an alert popping up. The election connection was disconnected, unable to stream to, all right, one of the destinations is down. We're going to terminate Rumble. All right, so we're on a bunch of platforms, but not Rumble. Oh, well, we'll figure that out another day. Anyway, I was calling people up and asking, if you want to do that, then that's fine, but you need to define it for me. And so people would ask me all the time, like, the usual questions, like, how could you be opposed to environmental, climate, social justice, governance, whatever. The race baiting, CRT, DEI stuff. As you can tell, very I'm beyond skeptical of the stuff until somebody can define it and show how you're defining it, why it's needed, and what is intended to be fixed, and then how you're going to measure it. All it is just smoke and mirrors and fluff. If you want to do that like in a club or an organization or something, then I guess have at it. And then hopefully there are some people that will look over the shoulder and make sure it's not just people making off with lots of money. Yeah, that's what I would suspect and encourage people to watch. But in the world of finance, if you're managing something like a mutual fund and you put all over your website that you're going to manage the mutual fund and make your investment selections based on fill in the blank: environmental, social, governance, diversity, equity, inclusion, all that stuff. For people like me, they must define it. Must. It's not a question. It's not like, well, I'll just trust you to do things completely differently and hopefully maybe it's good and you make money for the client. That's ridiculous. It never, never, ever should happen. So I spent a bunch of years asking questions and I never got an answer. Never. I actually sent emails, I made phone calls, and I talked to a bunch of people, friends of mine that I have spent years and decades with in the world of finance. Many of them were afraid if they kind of stuck their head up and asked questions that they would lose their job. And I don't blame them. I think they're probably right. They would be under the gun. So I started Unwoke Investing, which turned into Unwoke.Academy. We're on a bunch of different social media platforms, and I've been blessed and honored to have some great guests. A few weeks ago, if you're welcome, by the way. If you are new to the conversation, a few weeks ago I hosted Ken Walls from Breakthrough Walls. He was kind enough to include me on his show about maybe not quite a year ago, 7, 8 months ago, whatever it was. And 2 weeks ago, he's on my program and mentions the software that he really likes called EVMux. And EVMux is what I'm trying out. This is like, I think, my fourth. I just went for it, bought this software. So I'm running this conversation using EVMux, which reminds me I need to switch over to comments view. If you're viewing this on social media and feel so inclined to ask questions, please do so. I'd be happy to answer questions and provide some comments. So, what I've been doing in order to do two things, in order to provide some interesting, hopefully useful content to you, and also give me a chance to kind of kick the tires on this cool new software that I bought called EVMux at the suggestion of Ken Walls. I have been doing these daily things, roughly daily, where I dig into mutual funds and take a look at what's under the hood. In case you didn't know it, mutual funds are not in and of themselves an investment. Mutual funds are a manager who decides how to invest your money. There's a key distinction there because every mutual fund has his stuff underneath. It's if you kind of lift the hood, so to speak, you can see what it's invested in. Many of the companies, depending on where you invest in the mutual fund, many of the companies that that fund invests in would probably seem familiar to you. So I want to show you in using publicly available resources. I do that in every podcast and post that I do on UnWoke.Academy with very rare exception. I, to be clear about my vantage, I actually have some software that I've paid for, and I have some things working in the world of finance that are behind a paywall. I don't use any of that in these types of discussions. I want to only pick the things that you too can go and research. You can jump on, follow me step by step, or do your own research into anything that piques your interest. For instance, if you're given a 401k enrollment booklet or something, you can dig in and do the same things I'm about to do. So I'm going to do a screen share and show you what I'm looking at here. Bear with me 1 second. I am going to share something called Morningstar. Morningstar will bring it up on the screen, and hold on a second here. We're going to do, oh, still not working. One day, let's see, full screen mode. Nope, that didn't work. As you can see, this is me checking out the new software, getting the hang of it. Now let's share media. All right, so I'm just going to take myself out of this scene here. then putting myself back in here. That, in a nutshell, is how. And again, Inspire Insight is not the only game in town. There are lots of different ways of measuring the worth and value of the underlying investments. But a starting point is knowing how easy it is. It's a couple of mouse clicks and a publicly available resource to look at the underlying investment. So if you're putting money with a mutual fund, and by the way, I suggest picking an array of different mutual funds, or if you're in a 401k plan and have an option that kind of builds a diverse portfolio for you, like maybe a target date fund or something like it, I encourage you to consider that option, or build your own diverse portfolio. I'm going to pause because there is a third option that's hidden and not known to most. Or maybe I shouldn't say hidden, but it's just not commonly known and understood. Many 401k plans and most plans that are out there have the ability to allow you to trade in individual stocks and bonds. That's called self-directed brokerage accounts. It's a little bit technical and it may sound strange to you, but there is no prohibition on the part of the IRS or anybody in the government level to what you own inside of your 401k, your IRA, or things like it. For that reason, and because there are some really sophisticated companies out there with really sophisticated investors, there are what's called self-directed brokerage accounts. Many different 401k providers out there have that as an option. It's typically turned off because they want to kind of keep it point and shoot simple. So it's very common to find a 401k with a limited menu of, let's say, maybe 15 different mutual funds. That's kind of an average, I think. If the self-directed brokerage account is added, you would have the ability of picking any one of those, or any combination of those, or go beyond it and pick from virtually the entire broad universe, which means two things. You can avoid management fees being paid to the mutual fund, and it also means you can gain access to things like exchange traded funds, individual stocks, etc., where you may have a much better, or you would likely have a much better understanding of exactly what you own and a clear picture of your portfolio, and make sure that it aligns with your values. A note on that: if you go from mutual fund investing, which is giving your money to somebody else to manage, to building your own stock portfolio, like our parents and grandparents did before the mutual funds kind of took over the landscape, there's a trade-off. You're getting rid of management fees, but there are trading costs. Ask about the trading costs. What I've found typically is trading costs are so low now because there's so much volume of trading that most investors end up saving a lot of money as far as overall cost, comparing management fees of figure 0.75% to maybe 1% to the mutual fund versus trading. And that would mean that every time you're buying something, figure, I'm just ballparking, maybe $5 per trade or something. There often is a world of difference. It's worth looking into, but only if you're the type that may be interested in building your own stock portfolio. It does, it takes some getting used to if you are accustomed to somebody else managing it for you. I would suggest doing a couple of web searches and you can find the difference, but it's worth considering. It's at a minimum, it's worth knowing that that may be an option to you. You may also want to go into your human resources office where you work and ask the question, is a self-directed brokerage account available to me? If they say no, and you ultimately decide that you would want one, there are a few more questions. You can ask them, does our provider, whoever it is that your 401k comes through, do they have the option? Do they offer a self-directed brokerage account? They may come back and say they don't want to add it because they're worried about extra workload or liability concerns, etc. That firm that offers your 401k should be able to effectively answer that pretty easily in today's day and age with technology where it is and with safe harbor protections that are available to protect the company if they add it. It really often is a no-brainer to just flip the switch and give you access to that. And that, if you do that, would eliminate the need for really a lot of that going to Morningstar, looking under the hood, looking up mutual funds, etc., because everything then becomes clear and transparent. You know what you own. With that, I'm going to go ahead and sign off. This has been another uh, quick summary look into a mutual fund. Expect more. Oh, by the way, my email address, you can email me at info@unwokeinvesting.com. Send in, don't send any personal information, please, or post online in the comments any mutual funds that you would like to see put through this examination. And every once in a while, I'm going to hop online as time permits and do another segment like this. Thanks for listening.